Good morning, everybody. Had some extra time today, so I figured I'd get on a little live stream. Test, test. Make sure my mic's on. Start in just a moment. All right. Good morning, ladies and gentlemen. All right. Hey, nice. We're going to take a look at the markets. If you guys have any questions, we can pull up individual stocks. We're getting a little bit of a bid back here in the markets, and we're getting that bid back as it's coming in. What did I just do there? As we came into the lower implied move for the day. Here's the SPY on the 15-minute time frame. Sold off a little bit here. And we're kind of coming back into that daily volume weighted average price, which is roughly right at the daily implied move. So nothing too crazy going on today as it stands right now, but decent volume as European markets are now back open too. Yesterday was a light volume day. Kind of keep bumping our heads just on that daily VWAP. The green dots, are you referencing right over here? These ones? That's something that I've been working on. Something that I've been working on. Can't give away that sauce. This is NQ, by the way, MNQ. And you can see we're just butting our head here on the daily volume weighted average price here multiple times as well. Boom, 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 boom. Market net flow today, bearish. Red line going up. Green line been going sideways. Have convergence. Market's been just heading lower. Take a look here at chat. Thanks, Carl. I appreciate that, Carl Swart. And Cameron, thank you. Asking about pressing second. If you protect, yeah, so protection is always first, and then adding exposure is what I mean by pressing. And you do that when you get more confirmations, when you have more ideals in your favor. Doesn't mean you're going to be right. It's just more ideals in your favor. If that makes sense. I have my news alerts in the background. I don't know if you guys can hear those going off right now, but I hear them, so I got to figure out how that works, but I don't need to do that right now. What's up, Varma? What's up, Scott? Robin? Yeah, if it's a higher quality setup, Cameron, exactly. You don't want to just kind of go all in on something like if all of a sudden the market's showing ideals that are starting to shape up, right? We're back above the gamma flip line, back above rising 5-day moving averages. Things are looking, better. Maybe perhaps we even get that follow through day that we've been tracking. Perhaps things are getting better, but if you're looking at a stock and it just looks like absolute garbage, probably not the best idea to just full throttle into something like that. So for me, when things get better, I like to just add, exposure more into the S&P 500 or into Qs or something like that. And then once it's kind of proving itself, if there's a good setups for individual swing setups, I like to start adding each single stock exposure back. Not that I really stop that overall, but that's when I feel a little bit more confident. We can pull up some of those names that I've, am currently trading. Apple's getting hit pretty hard today. This is outside of a daily 2 standard deviation move and underneath the weekly implied move right now. That news is just going off right now. This is one of the trades from earlier today. So Apple, right? This pink line once again is the 2 standard deviation daily implied move. So this thing is down, 4.3%. It's one of the larger market cap names, obviously, and it's getting hit pretty hard alongside Tesla. So Tesla and Apple are the ones that are getting really, really hurt today. Microsoft, Nvidia, and Amazon, they're down, but pretty much nothing at all, right? 1% on one of these names is not all too much. If we take a look at how they're standing as far as their weekly implied moves go, we have Apple is trading now underneath its weekly implied move, right? So it's, we can doodle around here. Tesla has broken underneath its weekly implied move here too as well. And then AVGO, Broadcom, Avago, whatever you want to call it, came into its upper implied move for the week. Meta is still kind of just trading flat for the week. Amazon's trading flat for the week. Nvidia is trading slightly down for the week, right? Same with Microsoft. And then Google slightly up on the week. All well within expectations for the most part here, other than just Apple currently and then Tesla. We had one tick reading today of a over minus 1,000 right over here. I did trade this, right? I traded it right down here. And I played it up to just about right here. I missed this. I got out a little bit early, which is totally fine. But, you're talking from 942 up to and around 2410. That's a pretty good move. Pretty darn good move. And then this came out of nowhere. I think this was just some news thing. And we're just bumping our head once again on just the daily view up. So overall, if we can get up here and start to tighten up, this would look a lot better to maybe come back into the opening range. But right now, as it stands, we're just doodling around the lower daily implied move and getting hung up at the daily view up. Oh, thanks, Sam. If there's a ceasefire, would you say we are at the bottom and buy tech heavily? Are we at a good place to buy if war stops? Look, I personally think that the market was ready to roll over prior to the actual war itself. What's up, MS Trader? Long time. So there was some structural things happening that led me to believe that the market could roll over anyway going into this year. And then, we'd always say, like, there's probably going to be some sort of a catalyst that helps drive the volatility. And we have credit problems. You can just look at various banks, right? Like Owl, for example, right? This thing is, getting destroyed here. There's a couple other ones. But yeah, then the war is obviously adding volatility. So I think that's going to add volatility, right? If there's a ceasefire or if this gets resolved. But honestly, I think the market is really good at discounting it before it happens. So, think back to 2022 when inflation hit its highest print at 9%. That was the bottom of the market, right? So, for example, if things get very escalated and we get very bad news and all of a sudden the market starts down but then reverses completely, that could be our signal to fade the most bearish part of it, right? Versus if we get the good news of saying a ceasefire, maybe good news is good news. I don't know yet. But, maybe we get a ceasefire. Maybe it's all like, oh, no, we're withdrawing. Okay, we get a bounce up. Maybe the market does some crazy stuff. But ultimately, we got to watch for the potential of bad news, but yet the market responds positively, right? Or good news and then the market responds poorly. So I wouldn't sit here and say like don't have convictions like some people do, like very strong convictions, if that makes sense, right? Some people are just like so adamant that they know exactly what's going to happen. And most of the time, those people don't even trade their own book, right? It's like they have this strong conviction, but yet their trades are completely different than what they say. At least, the reason why, a lot of people are like, well, is this going to happen or that going to happen to me? And I'm like, well, this could happen and that could happen. And this is what I do. And these are the levels that I watch. It's because I have a more unbiased, open approach to, I'll have convictions, but they're loosely held, right? If I'm wrong about if my thought is the market's going to go to all-time highs and it doesn't, do you think that if the market's going against me, I'm just going to sit there and keep on saying that until eventually one day it is? No, I'm going to get out of positions and I'm going to trade what's in front of me, if that makes sense. Here's SPY on the daily time frame. Like bouncing. Oh, what do you know? A big bounce. It's going to come down a little bit. Obviously, makes sense. I like to see people get shaken out, right? If we just move it down a little bit lower, just a little bit lower, people are going to say we're retesting lows. But for all we know, it could just be a higher low. Right? The thought here would be that, yeah, we can easily break these lows. But there was a lot of things that were oversold. We talked about in last night's market brief and the one prior to watch for a bounce. And, we have this wall up here at about 680 to 6,800 on the SPX that even if we were to come all the way up here and then everyone's like, we're flat on the year. Oh, everyone's so worried. Still the market is not in good shape, even at that point. And it's very common to have back tests like that, especially in more bearish type conditions. What's up, Nono? What's up, MS? You're funny. Will private credit issues result in the same situation as a great financial crisis? I mean, there can always be, something that snaps and something that breaks more significantly. That's for sure. Whether it's to that extent, I don't know about all that. But, I was looking at the chart of the SPX the other day, and I was looking at 2007, 2008, 2001, how they had 50% drawdowns. And I'm thinking to myself, if we had a 50% drawdown, that would bring us to, a 30% drawdown would just take us to where we were at the low of 2025, which was the last year. That's crazy. A 30% drawdown. And then a larger drawdown, say 40, 50%, that would just bring us to where we were in 2022. Pretty crazy. So I like to look at the expected move. What's the market pricing in for the quarter, right? Last quarter, we came right into the quarterly implied move, right at the very end. So I was watching not only the monthly implied move, the JPM collar, and then the quarterly, and I was setting myself up in here for a bounce. And then, I reduce exposure into the bounce. And now I'm looking to add more exposure back in, whether that's fading various names, given that we're a negative gamma, or breakout trading, which is not the greatest condition for that really right now, given the context of kind of just the market dynamics. Yeah, we can look at Dell. Yeah, put to call ratio being high makes you somewhat bullish. Yeah, it is up there. I like to put a 10 period moving average on the CPC, the total put to call ratio. And it's about 1.0, which is more in that bearish, overly bearish area. It's a lagging indicator, but it's still helpful, a helpful tool to kind of gauge sentiment. Yeah, you're probably right about that, Henry. Yeah, he's going to do whatever can to goose the market. They know when things are. I have a strong sense that people that are in the admin, they know exactly when they have to say things. It all works out almost to a T exactly when things are hitting like outside of expectations, when things are rather frothy, all of a sudden something comes out to make it bounce back. And then all of a sudden, when we start bouncing back, then they're like, okay, now we can say, this. And then all of a sudden the market rolls itself back over. And it's like this game of making sure the market doesn't like completely fall apart. It's wild. Oil has been obviously big mover. It's up quite a bit today. It's been up. I like to look at this flexible grid here of, watching how crude oil and S&P 500 have been responding. And right now they're kind of just moving, hand in hand in a way. But if I zoom in a little bit closer, maybe it's a little bit easier to see the more recent price action. You can see that S&P 500 has been going down. Oil has been kind of trending up higher. There's been this negative correlation, and oil can obviously have a huge impact, right? Especially if it keeps moving up like this. It's the rate of change of oil makes a dramatic impact on consumers, on businesses. We talked about that in the other stock market report. We showed various correlations that were negative to oil. All right, airlines. Like look at airlines. Straight down, while oil from the same point straight up. Why would that be? It doesn't take it like a rocket science to figure this kind of stuff out, right? So, yeah, Microsoft, by the way, I did trade. I don't have any more, but I traded it from this candle here for a little bit of a bounce into the weekly implied move. Yeah, Microsoft got absolutely just utterly destroyed. Nvidia is still going sideways. It's definitely not the greatest looking chart. Nvidia hasn't gone anywhere for a while, and it does look, obviously toppy. If Nvidia came off, that could be a pretty nasty thing for the markets. Apple also, it's not the greatest looking chart, right? You're getting a series of these rolling lower highs. And today we've had somewhat of a break. These snaps to the downside sometimes act like rubber bands. So I traded this today. I still have a little bit in. Outside of the expected move, outside of the 2 standard deviation. So I played it right down in here. Probably reduce that actually. Google, and I'll look at Dell in a moment here, but Google came off, 22%. Doesn't look like much because of how much it ran, but it came off 22% from its high. Amazon also hasn't gone anywhere for a while. Broadcom also just not going anywhere. And Tesla is getting clipped. Tesla is outside of its lower weekly implied move right now. And then Meta also not going anywhere for quite some time. So Meta came back from an extended move down. We bounced up, go figure. And we came right into the 2023 closing price for the year. And you can see we've acted as a level of support and resistance here prior. Just hasn't gone anywhere. So if I pull up something like XLG is the top 50 in the S&P 500. And that's a good barometer on the overall market, right? It's minus 13.3% off the high. And our high then was back in November. So if you don't have like the top 50 stocks performing, right? So for example, that high was October of last year. If I go to SPY, this high was over here in January of 2026. So the top 50 stocks topped over here. The S&P 500 topped over here. That right there is a divergence you want to pay attention to. Why? Because the S&P 500 is cap weighted, and if you have the top stocks in the S&P 500 starting to head lower, but the market's kind of just going, doodling higher without its top 50, obviously you can run into some problems, right? It resolves itself in some sort of fashion at some point. One thing that's been kind of on my mind lately is, if we go into like full blown, sell off, and then the Fed, say if we go into a deflationary kind of collapse where the Fed does step in and lower rates to like back to zero, which doesn't sound like plausible at the moment, given the context of how inflation's probably going to be ticking higher for these next few quarters, or these next few prints at least, given the context of what oil is doing, right? If you look at the CRB index, one of the largest drivers of it is energy. Same with, inflation. My thought here is, if we do end up, something happens and we go through more of a deflationary move and Fed steps in, you should probably start putting on the radar the names that like respond to that type of stuff. And I was watching some of them, names that like, these low price, smaller cap names. I got to get more on the radar, but things like BBW or BBWY, I think it is, Bed Bath and Beyond. BBBY. Yeah, BBBY. This is like Marcus Lemonis' company. This thing sometimes, if I go back to like 2021 on this, let me go. Gotta go back even further. Okay, man, time flies. Yeah, so, over here, when we started like cannoning, the quantitative easing, is that 2020 or 2021? I can't remember when it was, but right here, you just see these massive rips. And now, we're trading at these lows. So, if the Fed steps in and does anything crazy, these could be names that you might just like have just a little bit exposure to that just absolutely monster off. Now, right now is probably not the greatest time. Names like PCT, high short interest names. What other ones? There was all kinds of them, like Plug. These things, some of these things just rocket shipped to the upside, responding like very, very positively to Fed stepping in. I got to build out a more, larger list of this stuff. A lot of China names have been looking like they're kind of trying to shape up, like Baidu, which is, I guess, like the kind of like the Google of China. Wedging here. Baba has a little bit higher beta. Baba's kind of doing the same thing. They all kind of look similar to like this. Maybe not already at this current moment to trade these type of names, but start building out like a list and just keep them on the radar, because these things, when they come off hard and fast, you got to be prepared for potential rotations back in at some point. So they might not be ready now, but this is where you kind of do a lot of your work, where I at least do a lot of my work, and I start preparing for things, Yeah, BBBY was kind of like that meme stock. And now it's, Marcus Lemonis is trying to turn it into a legitimate company. And he has a pretty big position to it. And he says that he ain't getting out till like $40. So we'll see. I was watching like Playboy stock, at over here. Like, I was watching it over here at 70 cents, like prior to that. And like even names like this, like, right? I mean, this thing in a short period of time went 200%. That was, over here. Look at over here in 2021. Poof. Right? You get all types of like interesting retail names, maybe like Real, REAL. Right? Some of these shot off. Those could be ones to watch. Restoration Hardware has been getting hit very hard, and this thing moves. This thing has a super high beta, but another one that, if it gets cracked lower, and then all of a sudden the Fed steps in, we get some sort of easing. These could be names to watch because they can be up super quick. Are they ready to trade now? Once again, no, not in my opinion. Not in my opinion. It's too volatile. And if you do trade it now, you got to be like pretty small positions. All right, let's take a quick look at the S&P 500. We're kind of getting above the daily volume weighted average price right now. We did just recently close above it on a 15-minute candle. So that, that's a positive sign. Overall, though, not the greatest looking market flow. Yeah, nothing that stands out all too much for me. We're just bouncing, right? Just bouncing. Go back to my Apple trade. I want to see if we're back at the weekly implied move here, because that was kind of the point of my trade here, was to get out right at about there. So I'm going to go ahead and actually, as I said, I was going to reduce, and I didn't. So I'm going to go ahead and do that now before it comes back down to the weekly implied move. I'll go ahead and reduce that by 50%. Okay. Nike is one that I've been watching. Remember, the consumer gets smacked during these times, and Nike, right, is a consumer-facing brand, global powerhouse. But I started a position in Nike, and I was kind of hoping to see this more down into the 30s. More down into the 30s, and we might. I think we can honestly still get there. More in here, but I started a 1.5% position, so it's honestly nothing right now. Right here, on that day, on this day right here. I'm sorry, I started it on the day after, or just after earnings. I started after earnings, and then I traded around it to have my core position right down here at 1.5%, and this thing could get up to 6 to 10%. And then I trade around that, and the main core will probably be floating around 3%. Right there was a, we just got ourselves a little pop there in markets, probably from some type of news. And that was a extreme tick reading. And we're coming right back into the opening range. Look at this thing move. Let's pull up the news here. See what we got. Something that created that pop. No damage to infrastructure. No, that's not it. Iraqi cabinet authorizes Iraqi oil tankers company to lease available tankers in the Gulf of storage. Extend refinery operations when sakes are not possible. So some sort of news there. Let me go back over here. Nice. All right, well, that made a big difference. I'm actually going to cut off, once again, give me a second here, because I want to cut off my Apple position a little bit more. All right. We're getting some movement, so I kind of want to keep an eye right now on NQ and see if anything opens up here for a trade. Yeah, I don't know if that was the news there or not, the one that I just read off, but it kind of came at the same exact time. You can just kind of hop over to oil and see if that is the case. If oil is kind of collapsing down right now, that would be a indication that it was probably the news. Yeah, you're seeing oil kind of take a little bit of a back seat right here. Watch for some backfills, back and fill, right? Sometimes we get big pops like this on news. The market responds, reacts, kind of comes back in, settles in, maybe creates some sort of trade opportunity for these short-term scalpers. Dan's saying that Trump was saying something on Fox News, so yeah, it's probably him on the wire or something. I'll take it. That's why I don't like shorting in these markets. That's why I don't like shorting at all, pretty much. Apple was a great trade today. a great trade. That's awesome. Okay, let's see here. Let's take a look at chat. So Nike, what's Nike doing right now? Oops. Just coming back up to the daily VWAP. But basically what I was saying with Nike was I would like to see it more into the 30s to start like trading a little bit heavier size or trading around. Either that or wait till it gets better shape to start adding its size back on. So if I get like exaggerated moves in the price of Nike, I'll probably be there trading at that session. But right now at the moment, I started a position and I was kind of hoping that we can see it a little bit lower, but I don't think, I don't know if I'm going to get what I want. Really ever the case. How are the green dots generated on the chart? That's proprietary information. Are you talking about these green dots right here? That's proprietary. It has nothing to do with the tick chart. It might look like that, but it does. They have nothing to do with tick. I use the tick chart too, but it has this. My proprietary indicator here has nothing to do with the tick chart. It has to do with emotions. It has to do with speed. And that's about all I can say. The sentiment indicator is also proprietary. I can, I might change that eventually one day. I could probably end up saying what's included in that, or like what are these signal charts that I'm reading through. A lot of them are from the stock market brief. But yeah, like the calculation behind it is proprietary. So it's not just like, we're doing percentile ranks on the thing. We're looking back, a certain amount of time. Then we weight every single thing. I weight it. I don't know. I say we. It's me. I built it. Nike long. I mean, so just more context on the Nike long. The Nike long isn't an account that I'm probably not going to be touching that much, right? It's like I'm looking at a Nike long for a long time, and that's why I'm saying like I hope it goes lower, right? Usually, if it's in my shorter term account, I don't want it to go against me. I want to be right away. But I was hoping to see Nike more in the 30s, and I don't know if it's going to get there or not. So I figured I'd just start a position and I'll start trading around it if it makes sense to. What is script for TOS for the green dot? These are my scripts. These are all in here is my script. I don't have it for Thinkorswim. I didn't build it for Thinkorswim. I'm not going to build it for Thinkorswim. Unless if it's just like for me. But if I give out the Thinkorswim chart, or if I give out a Thinkorswim indicator, it can be restructured, copied, and so forth. So the thing is, like I'm not just trying to build an indicator here to sell it. Like this is mine. I'm using it to make money. And maybe after a while of using it and making money with it and figuring out, then maybe I'll allow, people to see it or use it. But but first I'm going to make sure that how it works in various various market conditions, test it out, and run things on it, and see how it operates and works. It's been a few months and it's been good, but also these last couple of months have been in certain market conditions. So I don't know what this runs like in other market conditions. I've ran tests, but I haven't done it live. So for example, like yesterday, what did yesterday look like? Yesterday we didn't move much, and this is what yesterday looked like. Just basically just a stall out here, some stall outs there, and some stall out there. I didn't do anything. What did the prior day look like? I think the prior day. Yeah, the prior day. So a stall there and a stall there and a couple right here. Hey, thanks, Mr. Wilson. My education background, I don't have any. Like, pretty much none at all. It's all self-education. I mean, I worked in the corporate environment for 13 plus years, and I got most of my education just in the corporate Fortune 20 company. A lot of various educational pieces there, marketing, business, and stuff like that. Just internally working for a company live. But as far as like sit down classrooms, pretty much nothing. A lot of books, but I'd only read the books that I'm interested in. You know, I'm the only one in my family that doesn't have a degree, actually. Everyone else was at school, going to school. I did some college, some school and stuff like that, but I couldn't, it is not for me. I just couldn't stand some of the practices and stuff. Like when I was learning about economics, the teacher was so hyper focused on how we spelled things. And he wanted like this. I'm not even joking when I say this. One of my economics classes, and I liked the guy because he was smart, but he wouldn't grade us on the knowledge and understanding of it. He would grade us on the answer has to be exactly how it's written, word for word on the book, even to a period, or it was incorrect. Like it was all memorization bullshit, you know? Just stupid. So yeah, like it just wasn't for me. I'm not like a guy that sits around and memorizes things to go take a test. I like live data. I like to work in the field, whether it's trading or even when I was at, in corporate America, being part of it and executing solutions, looking like it's funny because even in corporate America, man, I swear it's like they would analyze the data to the point where it made no sense, or they can make a good story or a bad story out of it. And, for example, like there's, it's funny because, some of the stuff that I did, was from just simple basic tests. So if you ever go into so I worked for, it was Verizon, right? So Fortune 20 company, and I worked there for 13 years. And if you ever go into like Walmart's and you see lighted displays in like cell phone areas now, especially Verizon, that was me. I'm the one that brought lighted displays to Walmart's. And then, I did this huge presentation of it. And I remember trying to get the funding for it. Like people were like, why would you put lights and stuff like that? So I went out and did field tests and I would sit there and I record eye sets and just random data of people walking by a display. And I showed them just the statistics on how many more people, how many eyeballs something gets with just light on it. And then I went a step further and said, if we're not going to run the electricity, if we can't have plugs, there's various materials like acrylics that when fluorescent light hits it on the edges of the acrylic, it looks like it lights up. So it's this bright, vibrant light. And so we started building these displays, and the amount of eyeballs and the amount of sales that went up just by doing that was absolutely insane. And now it's everywhere. Now it's legitimately everywhere. They took it to the whole next level, and now pretty much all displays have been upgraded, and they're all every company does it now. I remember doing like a field tests on like prepaid stuff, and I told them like we can't like we have to change our prepaid. This one really bugged me. This is also why I don't like corporate America. Is if you have a really good idea, your upper leadership will just basically peel it from you, and you won't get credit for the most part. But I remember doing field tests and stuff like that about prepaid and how it had this negative connotation. So we completely redesigned what it might look like for prepaid. And today that's known as Visible, right? So if you look up Visible, the cell phone plan, it's Verizon based, and it's prepaid. But the original creation of it took place in Sacramento during this program, and we put together this entire project. And they decided to turn the project off because it could be very expensive. And then we were at this thing, this event, and it was so funny because all of a sudden, one of the top executives was presenting this idea of changing up prepaid, and he used my freaking presentation, word for word. And then I remember my boss looking at me like, "Hey, they're using your presentation. That's so cool." And I was like, "What?" Word for word, like the same thing, the same test, the same everything. I'm like, it was like, dude, that's crazy. That's wild. Cancel our project and then just take our work. And then it's such a, I swear, corporate America, man, it depends on the state that you're in. California, corporate America, man, they're just a bunch of like, a lot of people, man. It's just like trying to just claw up to the top of the ladder. It's horrible. Happened to you too? Yeah, it's crazy, man. It's everyone is like kicking and clawing and just trying to climb up higher, and then you get like. And the thing is too, it's like a lot of people like it was all about like first off it was like, oh, you got to have a degree, you need this, and then I was like, well, I'm not doing any of that, so I'll show them more creative approach. So I just started building a lot of relationships. That's all I did, and then. At the same level relationships, you build so many relationships and you do so many for so many people that are just same level as you, they start getting promoted. Then they remember you. Then they're like, well, we got to take him with us because he was great. So then all I did was get carried. That's all I did. I just kept on getting carried and carried to the positions that I wanted to be in because of relationships. And that, that's another thing that if you're in corporate America and you don't understand that, hey, it's all about relationships, unfortunately, you gotta work that system. It can go against you very hard too. Bunch of vultures. It is. It's wild. But, I had good times. That's for sure. Good relationships. You can be replaced very easily. That's for sure. It was a little bit of a douche move, I would say. Yeah. I kid you not. So, okay, let me just be very clear here of how I know that he used my presentation is because I lined up actual real customers. Like I went out of my way to get customers and sat them in a chair and we filmed a full thing about the word prepaid. And I would show them a word very quickly and I would want their first reaction of what it would look like. What is their thought on prepaid service? Which prepaid, for those that don't know, it's non-contractual, right? And the first thing that most people said was scam. A couple people said like burner, drug dealer, just stupid stuff, like basically shady stuff for the prepaid thing. And that was the whole point of it, was having a rebrand to not just be, hey, we have a prepaid plan sort of crap. And he used those exact things. He like told the audience, he was like, tell me your very first response when you see this word. And then on the screen it said prepaid. And by the way, just to paint the picture even bigger, this was in front of about 200 to 300 people that all employees. Dealer would have been my first thought too. Yeah, see, it's funny. You're not the only one. It's too good. All right, let's see here. Anything happening? Nah, market's just kind of consolidating that recent pop. Market net flow, still not the greatest look. Holding daily VWAP, a little bit of a balance. Honestly, nothing much. Any visible dips to buy for like daily or for maybe more swing trading? Not Nike. I meant Adobe. I like Adobe. I think Adobe can go lower, but some of these names I don't think are going anywhere. I've been just getting a pretty long list of names that have been just getting beat up. Adobe, General Mills, Nike, big brands. PayPal, yeah, PayPal was another one that I traded. PayPal, is actually kind of consolidating here too. But yeah, so, PayPal, another big brand right there. UNH was on the radar, and then it kind of, went a little bit lower, and then today cranked right back up. So again, pretty volatile there. I mean, there's just a lot. There's a lot of different names that have been smushed to smithereens. Corn. Let me see. I feel like there's some corn. Yeah. I think it was wheat or something like that. I can't remember. I don't really trade the agricultural stuff all too much. I used to. Maybe will again one day, but cane. I did trade. That was one that when I said I used to trade agriculture stuff, cane was one of them. Bunch of series of lower highs here. I mean, this one saw a huge move and then is pulling back. Just too choppy for me. Wheat looks good. Yeah, you're right. DocU. I don't really know much about this one. DocuSign. Like, I feel like I need a bigger company. Like, I know DocuSign's big and I've used it. But when I really think about it, I'm like, can they get replaced pretty easily? I just don't, maybe not. I don't know enough about it. That's why I say that, right? Or when I think about Adobe, it's like, Adobe's a behemoth. Can it get replaced? I mean, there's always the case that things can get replaced, even big companies. But when I think about Adobe, I'm like, they're massive. they are massive. Getting another pop here in the markets. Little squirt higher there. You have a friend that works where? Oh, you have a friend that works at DocuSign. What does he laugh at? Just the stock itself, or what, or how it can get replaced, or what? What is he laughing at? That's pretty funny. Hey, what's up, Exotic? Yeah, it might be. Look up honey, but look up honey investigation and their ownership of it. I'll have to do that, Trey. Look up honey and like honey, like PayPal. Is like a company called Honey, or is it like they own like honey farms or whatever they're called? ISRG. How does tick perform above gamma? So tick is just reading ticks, right? Up and down moves in the market. When you're in positive gamma, you might get less, extreme readings. But it's still it's not about working good or bad. It's always working fine, right? It's not like it doesn't work, right? You just might get less readings that are extreme. That's it, ISRG. Yeah, man, this thing has been straight down too since the beginning of the year, huh? Got earnings here in a second, right around the corner. Intuitive Surgical. Ah, man, it's just chop, like very choppy. Range bound, that's for sure. Weekly, in and around this kind of larger range. Some might call that, somewhat of a double top, double top, double bottom, whatever. Very choppy. A couple other random names like Grab. I mean, this is a pretty big name. Not in the States, but grab. It looks like all the China names right now. But this is like, where's this base out of? Yeah. Cambodia, Indonesia, Malaysia, Philippines, Singapore, Thailand, Vietnam. It's like the Uber Eats of enables a private hire drive. Yeah, it's like Uber Eats, but just not in the States. But this could be one that takes off. I traded this back over here a while ago, and we saw a massive move. That was awesome. And it was looking good, and then we just reverted, and now it just kind of looks like pretty much all these other China names. Like if I look up Baidu, right, it looks like the same dang thing. Look at Baidu. RCL, that's a cruise line, right? I would say cruise lines and airlines would probably be good to watch for sure, but think through the consumer portion of it again with oil rising, right? Are these cruise lines going to start applying these? Are they going to hand off costs to the consumer? And if so, and the consumer's feeling already at the pump, say, are they going to be more willing and apt to go on a cruise line? And the market's very quick at discounting that. Palm Tree, you use Grab? How was it? Is it like legit? Is it as big as I'm told it is, and how big I think it is? It's pretty popular out there. You use it every day, man. That's pretty, yeah. They own Google Chrome add-on. I'll have to look that up, Trey. Blue. But that's interesting to know that you use Grab. So that's kind of cool to have somebody in here that's actually used it. Punctual. You'd like to see a big move, Daryl? Big move down. You missed the whole move. I don't think. Are you talking about the bounce that we recently saw? I wouldn't worry yourself about missing this, right? I wouldn't say you missed it, because right now you could just say, "No, I'm just being patient, right? I'm just waiting for things to firm up." Like this, like you might have missed this little bounce, but if you missed that right here, you're doing really good, right? But it feels larger on a day-to-day basis. Like we bounced 5%, but in the grand scheme of things, like looking at this, I wouldn't put you in the bucket of saying you missed that, right? I get like, oh, this little bounce here, things got extended, but also timing the bounce here was very difficult, right? We had to look for like various ideals to start packing in our favor. And it's not like I caught the bottom here. I started this day right there. So this day right here, it was down. What was it down? It was down. Let me actually, because I was golfing this day. Okay, so yeah, it was down about 1.8%. And my account was down 40 basis points that day, or 40 to 50 basis points that day. And then after close, I was like, well, I'm going to start adding in now, because we came into like the monthly implied move. And then I started adding more right down in here, which was the quarter to date and also the JPM collar, underneath the JPM collar. So then we start bouncing up, and it's like, okay, well, and then I start getting out, and it's like I didn't catch the bounce perfectly, but good luck trying to catch the bounce perfectly, right? What I always say this is when the opportunity for the bounce comes in like bearish conditions, it's not going to be like an easy feeling. You're not going to be like, you buy it and you're like, don't feel pressure. It's very rare the case. So you have to do it like small and start small. And if you catch it perfectly on a small, you caught some. And if you don't catch it perfectly and it goes more against you and it's small, it doesn't nearly bother you as much. So I wouldn't say you really miss much. Because this thing could be right back down here in 2 days. Like, it could be up here, and even if it goes up to 670, you can see how it consolidates and stuff. Right now, it's the patient game. It really is. It really is. Yeah, and it dropped even more than next, right? So it's, and then look at this day that like, this is why I mean like, oh, and then it drops here, and it's like, people now start freaking out, but then you get this gap up and then just rip up higher. It's like, oh my God. And then that's how people miss it. It's never easy. It's not. Which is why, right, over here we talk about how the market could potentially roll over. And when it starts getting down here, we start saying, okay, get ready for a bounce. you know, we try to get ahead of it before it happens. Versus like, I started noticing like other analysts, they're like, oh, it bounced because we had this bullish divergence. It's like, what good does that do? After the case, it's like the bounce came. You got to point this stuff out before it happens and prepare people. Yeah, there you go, Meat. Hey, what's up, comrade? Yeah, I haven't been live for a while. Today I found some time, though. I was like, I can go live today. And now that I have a more steady schedule for like my market reports, Monday, Wednesday, and Friday, makes it a little bit more easier on me. Plus, I've been trying to freaking get my all my like development stuff, back-end stuff working properly on my Asher bot, because I just keep on running into little problems here and there. It's like we fix something and then like if something else happens, I'm like, oh my goodness, can we please? It's not even that complicated. There's other stuff that I want to develop, but it's like I'm not developing anything else inside of that until this gets buttoned down. So we have now error handling. It's a little bit quicker to respond now as far as like fixing things. So we're like, it's just growing pains. It's just growing pains is all it is. And we're about there. The biggest question is the bottom in? A bottom is in. That's for sure. And a bottom. The bottom, I don't know about the bottom, but a bottom is in. So now we look for a higher bottom, right? You want a higher low. Then you want a higher high. So for example, like if we come up, comes down, and it breaks through this, then we have a higher low and a higher high. The only thing you know about divergences is that you only know it's one after the fact. No, that's not true. You look at a divergence as it's building. You know if it resolves itself after the fact. You see what I'm saying? So that's why we look at that. Like for example, right? See how price action was going down right here on the SPY? If you actually watch this market brief, we talked about this. And then how we had higher lows in the RSI. If this gap down, right, one, I don't know if it would still be building at that point, but say if it came way down here and like cracked down, then, it would resolve itself. It wouldn't have resolved itself to the upside. But you would know that, hey, internal strength, weakening price, there's a bullish divergence. So one or two things happen there. One, you say, I'm not going to short here because it's stupid, right? And then you look for the bounce. Or two, you can potentially trade it for a shorter term bounce. But yeah, you know if it resolves in hindsight and how it resolves, but when it's building is very important because that's data, if that makes sense. Like we knew the S&P 500 on the weekly time frame. Like here, I'll show you. I'm using just an RSI for whatever reason, but so so we knew that this high and this low, we knew as this was going down, we knew that there was a divergence that was building here in the RSI. And we talked about it all like many weeks, just as it kept on going higher. And then we talked about breadth divergences and all kinds of random things. And then all of a sudden energy started outperforming and there's more stuff. We didn't know that it was going to resolve to the downside, but we knew and we're hyper aware that, hey, internals are weakening here. So when we start to go under the gamma flip line, we said, be more cautious. Like be more careful here because that's when things can actually get worse. And it's stacking ideals and stuff into the favor, right? It doesn't have to resolve itself in a bearish manner. But what you do need to notice is just the data is there, you know? If that makes sense. Probabilistic percent. Yeah, there you go. Yeah, there. Yeah, exactly. Exactly. Bingo. Yeah. It's not, yeah, we all know nothing's guaranteed. There's no indicator that works perfectly. It's just all about stacking ideals, right? And then when ideals are stacked in that bearish favor or bullish favor, you can feel a little bit more confident by saying, hey, now I'm going to go long here because X, Y, Z, and this is happening. And if it plays out, awesome. And if it doesn't, you'll be like, well, everything was stacked in my favor. And I know that if I do that over time and time again, I'm going to have more winning trades than probably losing trades because I'm going with more things in my favor. If that, you know, that makes sense. Yeah. I should start tweeting like Trump. Oh my gosh. Any trade ideas if Iran gets another reprieve? I would say as far as the trade ideas go, anything that's kind of negatively correlated to oil would be probably something to watch. Because if oil comes off, you know, you'd want to know what positively responds or what's been negatively responding to that. So that could be an option there. It's so hard to say. I mean, look at the bond market today. Look at TLT. Well, that's a pretty big move. It was bigger. It was getting cracked. It was getting crushed earlier. You took a short on oil? Pray for you. Like what vehicle are you using? Or you just like straight up like shorted like CL, like futures market? Thanks, Brian. So if you're trading, often trade SPX 1 DTE and always look for edge. How do you use volume profile? So I don't know. When I think about SPX 1 DTEs, you might want to look into things like yeah, you definitely want to look at expected moves, but you might even look into like butterflies and start looking into that. And getting prepared for the next day, the night prior. You can look into the expected moves ahead of time and then you try to target them. So if the market's like really extended to the downside, you know, you might want to target an upper, you know, build a butterfly around an upper implied move. Now, if you're just intraday trading, it's not like it's support and resistance per se, you know, the expected moves. I know it looks like that in some cases, but these are just mathematically derived levels of levels of risk, right? So it depends on how price gets there ultimately. And you can create small trades in and around those. I like to see ideals stack in favor. So if we crack down right into the implied move, I'll be watching tick. And well, look what tick did today right down in here. It actually, we ended up at about 8 o'clock. We got a very extended tick reading. On top of that, we were right at 8 o'clock, boom, coming down in the lower daily implied zone. So that, you know, that could be a way of doing it. You just need to be patient for those setups to kind of go. Tasty Live. Let me see. You know, I think I had to respond back to Tasty. I'm not too sure. Tasty Live is Did I miss one of your messages, Itchy? You know, Tasty reached out to me and wanted me. They ran a few interesting studies. Okay, Tasty Live ran a few studies. You know, they reached out to me the other day and wanted to bring me on their show, and I just did not respond. I have to respond to them. Tony Batista to go live with Tony Batista. I think that they wanted me to talk about like the war in Iran, and I was like, The hell do I know about that? The hell do I know about the war in Iran? Why are you gonna ask me? I'm not a specialist. So I don't know if they like thought that through, or like their assistant like was like, yeah, come give your comments on wars. Like, I mean, I'll tell you how I trade, but I'm not gonna comment on something that I don't know. It could be. I mean, if I can, I'll message them back. I'll say if it's more about trading focus and, you know, like a couple comments as far as like, you know, what's moving in the markets, then okay. But I'm not going to give commentary on like the Strait of Hormuz, right? Not going to happen. I know my boundaries. I'm totally fine with that. I'm not one of those people that just like all of a sudden become a professional overnight when something happens. Trade as much as possible. I don't know. I'm not familiar with them. I'm familiar with the platform a little bit. But the original developers of the platform, I don't think are there anymore. I think it was like Tom Sosnoff, if I remember correctly. I could. You can comment on Trump's tweets. I don't even know how to even make comments on that. Like, if you notice on all my market reports, it's like none of it is mentioned for the most part. It's just something like, yeah, like a message can come out and we could just break. Like, it's crazy. Like, so I try to focus on what we can control, and unfortunately, that doesn't get the views and attention. But it's also all that I know. So everyone's an expert. Exactly. It's true. You've been sick for 3 days, man? Get better. Ugh. I hate being sick. Tom is still there. Oh, okay, cool. I didn't know that. Good to say hello, yeah. Oh, he does some Q&A with him? Yeah, I guess I can look. I'll read the email again. I'll read it up. I think I just got busy. I just like overwhelmed at the moment with all this stuff that I've been doing, and it's like I can't commit to anything right now. You can't get sick anymore? I'm telling you, man. Being sick is the worst. If there's a nuke that happens, will the market be up tomorrow? I don't know. Tom left Tasty. Tom is with Tasty. Tom left. I thought Tom left Tasty, but he's still like kind of around. Yeah, I wouldn't know if. I'll tell you this: like if something that dramatic happens, for example, and then the market started down and then reversed itself, that could be a big indication that we're going higher, right? Because it like goes right back to 2022. It happens all the time where we had the highest inflation print at 9%. That marked the bottom of the market. So sometimes the market just does weird things like that, right? I don't know. If I knew exactly what was going to happen, when it was going to happen, I still don't know how the market's going to respond, right? Like, a lot of people don't want to admit that, but like if I had Jerome Powell's ear or Jerome Powell had my ear and he was just like, hey, this is what I'm going to say tomorrow. Do you think that I would know how the market's going to respond to that? Unless if it was clear as day, like something, you know, like, but everything that he says, if I knew exactly that, like I wouldn't, zero idea how the market's going to respond. You know? Yeah, we had that deadline today, huh? Am I playing anything? I just have my regular positions on per usual. So if I get a bunch of stop outs come tomorrow morning, I'll be down probably 1% or 2% in my account, right? Maybe not that much because I'm pretty lightly exposed. And if the market rips up, I'm probably going to miss it. Like if the market's up 1.5%, I'll probably be only up 50 to 60 basis points. And I'll be like, that sucks. But whatever. The gods control the market. I swear you can get like, it's all flow now. It's like all order flow. And it's crazy because you can have a big order hit the tape and it's just like changes everything in the day. Like yesterday was a really light traded day. If a big trader came in there or a firm, it came in there and just threw some size at it, like it would move the market. So it's like, you know, we look for the news and narratives, but it's like, just holy moly, it's flow. And by the way, the market has been so incredibly efficient at pricing in risk. And this could, I'm starting to think that it might be because we recently started doing more zero DTEs on like the Mag 7, Mag 8, like some of the bigger names, right? And you got to understand, like look at, okay, dude, just like look at this, okay? Look at this. You think that zero DTE is not a big deal? Think again. Look at this. Let me go volume. Now let me go volume open interest. Okay. Look at the open interest on this zero DTE right now. So now it's a zero DTE, right? On SPX, couple hundred here, 500, whatever, you know, 5,000 over here. Look at this. Look at the volume, 36,000, 71,000. 30,000. Look at the open interest on the puts. And then look at over here, the volume. Zero DTEs are running this darn market. It's crazy. That's SPX too, which is a, you know, huge product. Look at SPY. 3,000 open interest, 225,000, 195,000. Okay, so now we can go look into like Apple, right? Apple tomorrow has a 1 DTE. So you look at the volume traded, quite a bit of volume actually. But now we'll see what this looks like come tomorrow when there's 0 DTE. Right? So Nvidia, right? Nvidia is going to have an expiration tomorrow on a Wednesday. So a lot of the times now you can be like, okay, so for example, and I don't trade options, but like if I go to Apple right now, so this would have been, this would have been a trade setup. Well, it was, I did trade this, just so you all know. I posted in the Discord this morning. That was pretty much the only thing I posted in. It's outside of the weekly, outside of a 2 standard deviation move. I went right into here and I was like, I looked at the 1 DTE and at the time it was like $5. I was like, okay, well, there's a high probability that we come back up to the weekly. So you could, towards the end of the trading session, if it was still down here, target, you know, a butterfly or a, you know, whatever type of trade, $5 higher. And you could hit. And the thing is, it's a low probability win because you're like, it's kind of like that directional like bet. So it's low probability. But when you hit, it takes like 1 to make up for like 3 or 4 losses in some cases. So, you know, I don't do that. I just trade it with I trade the equity. I don't really get too much into just directional options or even spreads or much of that. But as time has been progressing, I have been now considering doing spreads more frequently. It just, I feel like it's about time that I start doing it. But I don't. It just level of comfortability with the equity. I just prefer it. I don't know. Oh, interesting generator. We'll buy leaps and shares, yeah. So yeah, the market's been highly efficient. And then this last week, you know, look at we're flat on the week right now. Give me 1 second. All right. Okay, so I forgot what I was talking about. We're right there at the opening range. Coming back, baby. Opening range. Yeah, well, yeah, when you're doing spreads, you definitely need to look at the bid ask on the. I would probably do it on more liquid products. Like For example, if I was looking at spreads in like the Mag 8, right, or the, you can structure them. You can find good cost, like good, you can. It does take another level of work to do that, because once you have an idea of where price direction could go, then you have to do the extra step of like making sure the trade makes sense from a monetary price, in the options chain. So is it a liquid option, right? So pretty much you might want to just only look at like options that have weekly expirations at minimum, right? Um, Rocket Lab. Yeah, we can look at Rocket Lab. What's up with Rocket Lab? Rocket Lab. Rocket Lab looks like it's trying to take off. Kind of in a just chop zone. Just in a chop zone right now. Rocket Lab. Is this like drone stuff? I can't remember. It sounds so familiar. Space company, launch service, United States, Japan, Canada, nationally. Okay, so like space type of stuff. So it's probably in the ETF UFO. Holy moly. Look at this. Space ETF. New highs this year. That's interesting. So yeah, Rocket Lab. It's definitely not a horrible look. I just probably would need some more time. Like I feel like if it was more up in this range, I'd feel a little bit more confident. But we kind of had this breakdown and we're kind of back testing it within this area here. But overall, it's still in a pretty nice uptrend. That's for sure. Let's go weekly time frame. Maybe reduce the noise. You look at the weekly time frame. Look at all these wicks. Kidding. Like it can't close above the weekly 10 weekly 10, which is roughly the 50-day moving average. So if we can, get through here, that'd be a better sign. Oh man, my mouse is going to die. No. I'm gonna just pull up this. I'm gonna just plug it in the charger for a second. Give me a second here. Actually, I'm gonna take a quick break. I'm gonna get some water. CRISPR. Oh, I want to see what CRISPR's been doing. That's been a while since I looked at that, actually. Yeah, that ain't doing nothing. What about Oscar? Oh, SCR. Yeah, it still ain't doing nothing either. I'm gonna take a quick break. We'll look at some more names here in a second. I gotta get some water and then go say hi to my wife. Put market net flow right here. That's hard to see. Whatever. Boom, 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 boom. We're just getting hung up at the underbelly of the opening range. I'll be right back. All right, I'm back. Ay. How we looking? Okay. Man, Apple ended up being a really good trade for me. What a good trade today. Pretty happy about that. Hell yeah. Hell yeah. Okay. When's my vacation? Get back to the charts. Shit. Pfizer getting hit. Whoa. What just happened? Hello. I'm out of this. Holy moly. Give me a second. Yeah, I gotta clean this out. Give me a second. Go. Holy macaroni. What the hell just happened? Goodness gracious. Yes, thank you. Must have been some sort of news drop like there. I'll take it. Imagine if I had a couple zero DTEs. I know, huh? Seriously. That's where the zero DTEs really come in handy. That's crazy. I was not thinking I was going to begin this type of move today. Sorry, hold on. I got to make sure that I'm getting this all accurate here. That just brought my portfolio to new all-time highs today. A little stupid thing that just happened today. Whatever that was. That's crazy. Like, is that happening across the board here? No. 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 Is it Nvidia doing it? No, this was isolated to Apple. There's news. Has to be news. Foldable iPhone remains on track. Oh, so it gets hit because it says so the Apple stock dropped because it was the foldable was not, there was delay fears, and now it just said no, it's on track for a foldable phone. That is moving way too much for a foldable phone. It's been years since we've had like some good tech from Apple, and like they're coming out with a foldable phone. Like, oh my goodness, my phone folds. Woohoo! It's a nice folding phone. That's a cool phone. It's like going back like the flip phone. It's like it's a flip phone, but for a smartphone. Oh yeah, that's nice. I'm just messing. I love my Apple products. I do. But the like, I don't know. If I just a foldable. I just feel like there's another thing that can go wrong. Like, no, it doesn't just fold like this. It actually folds like 2 times. You can roll it up and then fold it into a little tiny square. Only 3 years behind other folding phones. Oh, man. Apple, dude. Killing me. Whatever. I'll take it. That was great. Was not expecting almost a 3% bounce on Apple today from the original entry down here. Talk about a perfect time. Holy moly. Sometimes you win them, sometimes you lose them. Sometimes they're perfect, sometimes they're kind of a struggle. Definitely wish I had more size on. Whatever. Now let's do that with Nike. Okay, let me see here. Axon, what's Axon? That thing's hit a 2 standard deviation lower implied move. Axon Enterprises. Industrial. Software. Damn, that thing is getting cracked today. New lows on the year. Whew. Holy moly. Thing's down 60%. I don't like, fading cracks of new lows. Not my favorite. Body cameras on police. Oh, okay. Foldable shoes. EM trades. For my expected move trades, I mean, sometimes I don't even have the stops on, and if I do, it's just based off like a dollar amount of my portfolio, like a fixed percentage of my portfolio. Is my camera off? No, it's right. It's on. Okay, never mind. So like for Apple today, like I didn't even have an idea for a stop loss. My plan was just to buy some Apple, and I did, and I'm basically out of the position now, pretty much entirety. I've just been selling into this bounce. First, it was like a 50% haircut. Then it was a little bit more. And then that move right there was pretty much it. That's crazy. But, like, it's once again these probabilistic things. So could this have dropped more? Yeah, maybe. But first off, the day trade I can put more size on. And if it does drop, then I'll probably just get out if it's like, a 0.5%. Is kind of where my typical range is there, about 0.5% to 1%. And then if I can hold some on for like more of a swing trade, I don't hold that type of size for a swing trade. I can't, because if we gap down, then my portfolio can get really wrecked. Like if I take a day trade, full size day trade position, here, and we drop another 3 or 4% the next morning, that'd be too much. That'd be too crazy. So when I'm day trading, I can put on some size, and if it works out in my favor, I could scalp some of those profits and maybe leave a runner on. And I have a little bit of Apple left, but significantly less than my original kind of pocket amount. Pretty good with that. So another way of kind of thinking about through that is, if you're setting up a trade, like say I need it like actually, you know what? Here we go. OII. Oh man, yeah. So OII, this is I think shipping, transports, something like that. Let me see, analyze. robotic solution, offshore energy, defense, aerospace, manufacturing industries. Okay, no. I'm thinking of something else. Okay, but whatever. OII, this looks pretty darn clean, right? So ideal stop would be right here, right? But a lot of the times when it comes to this, like if I think that this is going to go higher, which it kind of looks like it's going to get some sort of continuation, I don't like really risk so when I create the amount that I want to trade, like I know that we can get stopped out pretty easily on these type of trades, and it'd be like 8%. Okay, whatever. I'd lose 8%, $3 per share. But a lot of the times when I start to look as far as size goes, I might get out of the position here for my stop, but I might look a lot lower to scale the size. So I'll be like, okay, but I want my amount that I'm going to be putting, at risk based off of a stop down lower, like 20%. At least on this name, right? It would be 20%. So in doing so, it means the size of the position is going to be smaller, right? If that makes sense. So, right here, I'd say, okay, say if I'm willing to risk, a 0.5% of my portfolio, I don't want to lose 0.5 or 1% of my portfolio. I don't want to lose 1% if it hits down here. I'd be okay with losing 0.5% of my portfolio if it came down here. And it gives it that extra space and a different size, structure as far as like the trade goes. But then if price does come down here, I'm not down a full percent of my portfolio or 0.5% or whatever the risk is, but I can see if it's going to turn back around, and maybe then at that point, I can hold through some of the volatility. And I like to do this in these type of market conditions. Like for example, here's another one, DE. Like I have a position in this, right? The ideal stop would be down here at these lows, but my structure has been way down here. So I would lose 1% of my account if it comes down here. If it came up here, I'd lose 2%. That's if I didn't make any changes whatsoever. So I've been just I technically would have gotten stopped out here but then I would have lost 1% of my portfolio if I sized it like that, if that makes sense. So I like to look a little bit lower and say, now I can deal with the volatility that the market's kind of feeding me given these conditions. So I'm like slightly down on this DE position as it's just doodling around. And if it breaks down here, I'd lose 1% of my portfolio. So if you trade, if you trade $100,000 account, right, and you lose 1%, you'd be minus $1,000 on one trade, right? Yeah, so you said that Tasty ran thousands of backtesting regarding expected moves and at 85% of the time. So it depends on what they are. So every single equity has technically different types of distribution. And it depends on the volume that's behind that too. The more liquid the product, the better it is as far as staying within it. So if you say 85%, I immediately think that they ran that test on SPX because I already know that it's in the 80s. I can almost guarantee you that's what they did. And I have no idea if that's the case or not, but I already know that SPX is the mother of all products. It's the big dog, right? And it's very, very liquid. So that or SPY, yes, it stays within the distribution curve or within the one standard deviation move 80% of the time. I don't know what their look back was, but it is definitely in the 80s. Now, if I go to something like DE, right? They didn't run a back test on DE, right? It's way less liquid. Way less liquid. Look at how many calls and puts there are. Today, 700, 600, nothing. So the confidence score is greatly reduced in a product that's not as liquid. So the distribution of it is going to look obviously different as well. I haven't looked at SMR. This is I don't know. It doesn't look good. Holy cow, dude! I don't know what's going on here. This thing went from $57 to $9. Ouch. That's like more scary territory. Yeah, you'll get bounces, that's for sure. But dang. Nuclear stuff, or is it nuclear? I don't know. It's kind of like an Oklo sort of thing. Looks like an Oklo. Oof. I don't know. You think that, you put these kind of like narratives together, you think that it would potentially go up given the context of what we're seeing. I don't know. Let's look at like FSLY. No, not FSLY. Wait, is it FSLY? No, but that looks great. No, that's not what I was thinking. Dude, what am I thinking? I'm thinking solar. Wanted to see what solar was doing too, right? It's another form of energy. These ones are getting hit. TAN, that's an ETF. I mean, that's still up on the year. Doesn't look good though. I'm not surprised to see solar getting hit given the context of what we're seeing in yields. These are like capital intensive stuff. And when rates go up and you have a lot of overhead, you can see that being the case. So we see rates pop up higher and we're seeing things like end phase kind of move down at that same period of time. What about some like transports, shipping transports? I can't think of any off the top of my head though. Is Nike down in the 30s yet? No, it's not. I think it's going to get there. 30, 35. All right. Okie dokie. Did my stream go off? Uh-oh. No, it says I'm live. Okay. All right, let's go back over to S&P 500. Not much movement. I think I'm going to call it quits for the day. I think we were live long enough. Let me think here. FCX. We can take a look at FCX. I mean, they're doing good so far. That's for sure. Copper miners. They're holding up. Copper itself has been heading lower, though. Copper kind of looks like it's breaking down here. So, yeah, like, look at copper. Like, it's almost like it's back testing this breakout. It's kind of flagging here. So, I would prefer to see copper, if I'm going to go along the miners. Not necessarily that they have to move hand for hand, but there is typically a strong correlation there. Kind of like not the greatest looking structure right there. Of course, Cameron. Zim. Oh, yeah, that's the one. That's a transporter, huh? This thing's moving and grooving. Yeah. actually looks not too bad. Look at this big gap up. So it's kind of just consolidating here. I'll be careful under 25, 25.50, 25. But man, this thing is just kind of consolidating there. Is it in the middle of being acquired? Maybe that's why we got this big gap up. Kind of seeing some interesting price action. Yeah, might need to look for other ones then. Yeah, I appreciate that. Think we got a buyout offer. Is that what caused that big move? Okay. I could look up like, I guess I can look up like stuff related in that industry, or I could find names that are similar to it. Let me see here. Give me a second. Zim. Look at stocks in the industry. Okay, we got ECO. I don't know if these are good volume names or not, but here's ECO. GSL. Global Ship Lease. EC. And all these are like, they don't look all too bad. The volume is low, obviously, on all this stuff. Let me see if there's anything. I don't know, man. RBNE. Ugh, no. I can't stand that type of stuff. Zim is the one that has kind of the, I mean, Kex, I guess would be one. Kex was on the tight list. That one's breaking to new highs today. SBLK. HSHP. Look at a lot of these shippers moving. Could still be quite a bit of opportunity in there. SB. Like this one looks pretty darn good, right? I would like to see it tighten up just a little bit, but man, we're just like right here at these highs. What the volume is though? God, it's such a low price. I mean, I'm not shocked, right, that they're low volume names, but that some of these have ran far and fast. Did I pull up Eco already? Yeah. Some random ones. All right. What's up, Eco? AMKBY? AMKBY. Is that like a shipper too? Or logistics through the ocean? Yeah. Interesting. Interesting find. And this one's also pulling back. Man, to talk about gappy. Also very illiquid. But yeah, I mean, some of these might just be really good plays. I don't really have an opinion on the delta candles when day trading. I don't use them, so I don't really have. Like, here's my opinion with like various different methods and techniques. You can make every method work to an extent, right? You just need to be very diligent of not like the position sizing of everything, right? So you're not going to find anything with a 100% hit rate. Some things will work better in certain market conditions, you know? So you find something that works with you, make sure that you stick to position sizing, which matters more than any type of anything. You know, in many cases, like I can probably just look at a few things and not even look at a chart and probably trade. I know traders that just trade the DOM. They just look at the DOM. That's all they do. Right? And then they have an indicator that tells them where opening range is. Like, that's crazy. But they do it. So all those things like can add more ideals in your favor. That's for sure, right? Right. I like to look at gamma levels, right? I like to look at expected moves. Maybe one day I'll do the add integration of what you just mentioned. But when it doesn't work or doesn't play out, the strategy doesn't work with whatever it is. You just got to be sure to cut it. That's it. The most important aspect of all of it is not like knowing adding more. It's taking things away and then making sure that you're just on point with your sizing and everything. The DOM, DOM. Yeah, Walmart just hit a 2 standard deviation move. Oh, you were watching. Good stuff. Yeah, Walmart's in a nice uptrend. That's for sure. I mean, a little bit crazy of an uptrend. That's for sure. But the weekly, it's just kind of going sideways here. And then today we just hit the 2 standard deviation daily move. And that happened to be at 122.63. Boink. Right there. KMB as well. KMB was at 93.17. These are the type of ones I like. I just wasn't watching it right now. All right, you get fast flushes to the downside like this outside of 2 standard deviation moves, and you can catch quick little moves back. And this thing has been getting absolutely crushed. I mean, look at this thing. This would be another one, like a big company, consumer staple, that I'd probably be having on the radar. It's not a great environment for consumer staples at the moment, but a lot of these consumer staples played really great at the beginning of the year and then reverted. So they'd be back on the radar. My boy crying in the background. KVUE. Also a big flush here. Where's SNDK going? Apparently to Saturn or Mars. Crazy. WDC, same thing, new highs basically. Wild. It was at $28 last year in April. 1 year. 1 year ago, it is up 1,000%-ish. AVGO trading around the upper weekly implied move. That definitely helps the market. Tesla trading at its lower weekly. Whatever happened to Apple? Apple's still holding it up. Google up slightly on the day. Not too far if it's upper weekly implied move. So, this would be one that like, if, are we going to see strength tomorrow? If so, this could be one to watch for a move. 5.65 is the expected move. So, that makes sense to potentially target the upper weekly implied move up into that range. Even if it were to come down into here and you think that we're going to go tag it, that could be an area to target up to. Once again, I don't know, is the deadline today or something like that, right? About who knows? Yeah, a lot of these space stocks look great. A lot of them I might feel like they feel late cycle. They need like some sort of a base to feel a little bit more confident. Isn't like Planet Labs one of those too? Planet Labs, right? I mean, that's holding up very well. BKSY, I don't know about that one. Yeah, I mean, this another one, right? This looks, I mean, new highs on the year. Yeah, I mean, it looks, a lot of these look really good as an industrial. Just want to see something here. BS, FDX. Just want to see what shippers do. FedEx kind of looks interesting here. Look at these 4 days tight right here. 3 days tight. It's kind of forming this wedge here. Yeah, I think I saw this in Pepsi too. Pepsi getting hit with just the regular consumer staples, kind of going sideways here. All right, what's up with oil? I mean, sheesh. With the news about this potential strike or this whole whatever's happening, I would imagine that we can see some pretty big moves in oil by tomorrow. We'll see if he does a chicken out thing or goes through with it. I'm not even going to speculate. I'm just going to just wait for it to happen or not to happen and see how the market responds. Boat is a shipping ETF. Oh, that's a great ETF name. Thank you. We were looking at shipping stocks. I didn't even think to look at ETFs, but Boat, that's interesting. Good stuff. That'd be one way to play it for sure. Look at this. Nice, huge, strong move up and it's kind of just consolidating here. Global shipping ETF. Good call out on that. Yeah, I would prefer actually looking more towards the ETFs here. I didn't even think about, yeah, something like that. That's cool. What's the volume look like? So low a volume. It's so light. But, you know, whatever. It is what it is. Most of those stocks are. Fly, FLY. Let me see here. Fly, aerospace. I like the B sky one a little bit more. God, I got one trade-off today for my futures account. I've been trying to get a payout, and I actually qualify for a payout right now for it, but I'm like, I want the max payout, so you know, I don't want to waste a payout not getting the max payout, which is annoying because it's like then I mess up, right? And it's like I don't get any payout. Not to say that's going to happen, but you know, sometimes it does. These guys partners with Palantir. Okay, interesting. Yeah, how's Palantir doing? Palantir hasn't been doing much. Hey, what's up, Richard? Palantir's kind of making a little move. All right. Oh man, are we getting some more news? Some of these candles here, it's just crazy. You go 30, 40 points in just a few seconds. No, I do have actually, now that I got to look up Take Profit Trader because I have an account there. I have accounts there, and I haven't actually logged in for a minute because I got so sidetracked with my regular account. No, I'm trying the new end of day drawdowns with Apex. I'm trying that out. I'm not good with the intraday like trailing drawdown. I hated it. it's just not good for me. But then they just introduced the end of day, so I've been working with those. So I got like 10 accounts of the 150K, and I qualify for a payout now on like 3 of them or something like that, and I just haven't taken it out yet. And then the other 7 are like right there, and I want to see kind of what that looks like or what that process is. So I'm giving them a shot because I've heard bad things, I've heard good things, but they're doing the end of day stuff with a lot of the rules and restrictions that have been like lifted. So we'll see if that's actually the case. Days remaining. I passed. They're all passed. I did a total of 10 accounts, passed them all, but I did like 5 at a time, and then I'm doing another brick of 5 right now, and I'm just trading them. Like I've been trading them for like. Actually, now that you bring that up, I got to check to see if they charge monthly fees on them because I've been trading them for like a couple of weeks. These evals, so I don't want to be charged again for evals. So I might have to push the button and force trades to try to pass them. But as of right now, I've like there's 5 of the 15 in total are evals, and they're just trading with my regular accounts. That right there was a tick alert, a little frothy tick reading as we're kind of popping up higher here. 66.05 on SPX would be a level to watch above us. Let's see if that's actually still the case. $6,600, 66.05. We're right there right now. We're right there right now. So, sorry. Are you guys hearing that little ding or no? Is that just on my end? Oh, end of day doesn't get charged again for the eval? Oh, that's good to know. Thanks, Didi. Good, because I've been trading the 5 evals that I have like super slow, just like with my regular accounts. Now we're at 66.05. Market's really moving here, so there might be something going on. Very extreme tick reading right there, so maybe you pull back into just flat on the day here. Maybe apply a volume weighted average price here too if you're trying to go long. Micro VWAP right over to here. The market wants to continue to rip through. I mean, there's some openings up there at 67.20. That's pretty far out there, to be quite honest. I don't think we're doing that today. But then again, that could be traders positioning for something tonight. Let's go! I should hop in my rocket ship, but the only thing is we're flat on the trading session, basically. We're still down on SPY. The phone rang. Yeah, okay. Okay, you did hear that, but I wonder if you ever heard the news then. That's weird. So, wait a second. Can you hear this news when it comes out? We shall see. Market just consolidating here. Oil falling too. Good. Wasn't somebody short oil? Something like that? I'm telling you, man. My life got a lot easier when I stopped worrying about shorting and buying long. It got so much easier. Like I couldn't imagine trying to short this with like him at the realm of just like doing whatever to make the market kind of hold up. It's just too hard. There's some stocks that like make it pretty easy to trade short. You just got to do. So if you are a short seller and a long-sided trader, I'll be very clear here. If you want to make your life easier, your shorts should probably be 50% max of what your max long is. So say if you have like, say if your max long position is 10% of your account, your max short should be half of that. And yeah. Can you hear that talking or no? Shorts 50% of my portfolio. No, 50%. Yeah, the thing is like, so when people say, oh, you're bearish, it's like, no, I'm like bullish and I'm less bullish. That's pretty much it. And yeah, there's going to be a time where I'm like, oh, I'm more bearish. But really, in theory, it's just less bullish because during that time, instead of looking for stocks of like what I can short and should be shorting and this and that, I'm focusing on the names that can potentially bounce and what I can trade when things get better. So it's like I don't need to exert all this mental exhaustion of trying to catch both sides of the market. But originally, that wasn't the case. Originally, I was like, I want to catch the longs and shorts and do everything. It's like, I want to trade options. I want to trade short. I want to trade long. It's like, no, now I just trade equities to the long side and the strategy changes in different conditions. And oh my gosh, my P&L curve got way, 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 way better. And my just life got better. I don't need to sit and worry and stress or anything. It's just like, God, I look for things to go long. That's about it. And I'm bullish or I'm less bullish. I look at risk. Right? Look at risk. The way that I hedge longs is by having more cash. It's pretty much the only hedge that I do. There's been occasions where I do short and I short like very, very extreme moves. I've done that, but it's once again small, pretty rare. But yeah, my hedge is just cash. That's it. I don't really overthink it. I could get a little bit more technical, tactical, there are things that I can do, but I'm just sticking to what works for me right now. On which level would I go intraday to join the Tesla uptrend? Value in preserving mental capital. It's very true. Because trust me, your patients are going to get tested. And you need to be like, you need that capital, that mental capital. That's for sure. Tesla uptrend. Tesla's in like a pretty downtrend right now. I'm trying to like hold my mouth from my mouse from going dead. Very low battery. Oh no. Oh no. Did I lose my stream? When Mike is less bullish, I get worried. Hold on, let me see what happened here. Oh, okay, you're all still there. Okay. I'm back. I love Thinkorswim. Sometimes it crashes though. I don't trade on Thinkorswim. They cut my accounts off because I didn't have money in there. They're like, just put $50 in there. Just put $50 in there and we'll keep your account up. I was like, okay. So I have like $50 in the account. I use it so much too. Thoughts on Siri? Oh, I forgot. I was going to look at Tesla. Siri, I'm pretty sure that this is a pretty heavily shorted stock, if I remember correctly, but surprisingly doing pretty good this year. Maybe if we can tighten up here, maybe it's setting up for some sort of a pot. I'm not a huge fan of these lower. Did they do like a reverse split or something? I thought this was like a $5 stock. Look at the weekly time frame. It's kind of like getting back above the 30-week, 40-week, 10-week. So if we can stay up here, maybe it's trying to mark up a little uptrend. I don't know. Not my favorite type of name, but definitely always opportunity and stuff like this. Tesla. Yeah, I don't. So Tesla's right there at the weekly implied move. I liked it when it was underneath it, and then you could trade, for a trade back up into it, kind of like what I did with Apple today. If I look at the trade tab, you have about a $10 expected move for tomorrow. So if we were to have set it up here, $10 higher, that'd been a pretty decent little setup. Once again, like, I don't know what's going to happen over the week or overnight. Sounds like we're doing some sort of a taco, which would be, I guess, good. But then again, what do I know? We did hit that 66.05. Why did I think that was going to be kind of a level of resistance? That's just this call wall right here. Okay. There is positioning out here. I'm actually kind of interested. There's that 6,600. 6,650. Yeah. It's probably kind of where we're staying for the day. It's probably it there. Not too bad. Did get a extended tick reading over here, and that kind of actually lined up with my signal as well. Same with this one, kind of lined up with my signal here as well. And once again, the tick has nothing to do with this signal, but I know it looks like that. Actually, it kind of looked like that all throughout today. I'm okay with that. Oh, 1-for-10 reverse split in September. Okay. Brokerages that I trade in, I have Interactive Brokers. I have Fidelity. Trade of 8. But that's like a prop firm. So that is what I do. Yeah, that was okay. I did scalp a little bit right there, but nothing worth mentioning. I got a solid $20 right there, just on a quick little move down. I didn't feel like mentioning that one. That was just a MNQ. Oh, no, prop firm is different. Yeah, no, I short the prop firms. I'm talking about my equity trading account. But it's still, when I look actually at the shorting on the prop firm side, it's like far and few between. I don't do it frequently. I mostly look for long-sided trades. And on the shorts, I get out a lot quicker. It's the same size when I short on the prop firm, but it's, yeah, typically out very quickly. And I'll just be patient and I'll wait for some overextensions and then just trade the long side. Yeah. See you, Cameron. How you doing, Smelly? Smelly's always posting good charts in our Discord. Makes me jealous, actually. He always has better looking charts than me. See you, Cameron. Say ASML is basing in an uptrend. Let's take a look. I think it's consolidating, but it kind of got like look how far it ran and how fast it ran. Like, right. So just, over 100%, it's going to deal with larger kind of volatile swings back and forth. When you have price movement that moves so you have tight consolidations and fast breaks, it comes to a point like after running so far where it's going to be like bigger swings, bigger shakeouts, and ultimately that's going to turn into some type of distribution or a larger base. So right now it's iffy for sure. Yeah, it's consolidating, it's basing out, but you would want to see this thing kind of back up here, to feel more confident. If you buy down here, like the chances of breaking this low, and we have earnings around the corner too, because we're going through earnings season here soon. You want to see it start to prove itself. CSCM, Linowski. Am I still in Microsoft? No, Microsoft I got out of because it hit my target. So on these type of trades, remember, so I think it was down here or something like that. And then I played it into the weekly implied move, and I got basically out right there, right before it. Once again, it's not a good looking chart, right? And yeah, it's setting up for that kind of bounce that I like to do, the bounce and fade, but I'm pretty much out right away. And then if it gets better and starts to look better, I'll try to re-enter. But remember, in these conditions, I'm fading extreme moves like I did here on Microsoft, and I'm typically less at risk, and I'm faster to get out, right? And then if it sets up and things start to get better, I'll start to add exposure back at a higher price. And I'll feel more confident and comfortable holding it longer. How long was I in How long was I in Microsoft? Like 2 or 3 days. It was like from here, 1, 2, probably 2 or 3 days. Yeah, somewhere right around there. I think it's in the Discord. I think let me see when I posted it. I think I posted in Discord as a trade idea. I don't love typing or doing these type of trade ideas because people don't quite grasp how to trade them. Or they go too hard and too fast. Yeah, so 3/27 was the day that I posted it. Yeah, so it was this day. All right. And by the way, it wasn't just Microsoft I was looking at. I was looking at other stuff. It was just everything was getting frothy, like everything. So then that kind of led me to believe signal charts and everything led me to believe that we can see some sort of a bounce. And cool, we did. Apple dumped hard today. Yeah, Apple was a great trade today, David. So take a look, right? Apple, outside of the 2 standard deviation move, already on my radar because of that. Outside of the weekly implied move, even higher on my radar. Then we started getting tight price action right here, right? And then we started breaking out. And so I don't know if you're in the Discord or not. Here we go. So this was absolutely on the radar at right here. Oh my gosh, what just happened? What just happened? I don't know what just happened. Well, hopefully I'm live still. Right here. So right there, 803, it was getting sold off. And then in hindsight, obviously, oh, wow, how'd you know that it was the bottom? I didn't know that it was going to be the bottom. I just knew that it was getting extended from a probabilistic perspective, outside of an expected move, way outside of the daily implied move. That's why I took the shot. I take a shot and then I'll trade it. And I didn't get out all right. I got out of some here, but also I got out of some here or right around here. I didn't know it was going to go up here, but I knew that from a probabilistic perspective, it's likely to go back to the weekly implied move and probably the 2 standard deviation move. We'll do it live. um, and this just comes with time. You'll notice with time, like how, what to look for. I like the bigger names when they do this out, like get extended like this, and then I'll execute into that. Those are typically higher probability for me. By higher probability, I don't mean that I go full balls to the wall on it. It just, I feel more comfortable executing like a bigger name. Like if this was Blue Owl, like, right? It's like, this thing could just drop like a rock, right? So I feel more confident with the bigger names, if that resonates. Do I ever try to follow trends? Yeah, that's pretty much all I do is follow trends. If you're new here, then it might not seem like that, because when we were in negative gamma, my strategy changes, and we've been in negative gamma all year. So take a look. I did create an indicator for expected moves. Yes. So expected moves get auto plotted. So for example, on Thinkorswim, this orange line, that's auto plotted. And then for here, you can see expected moves here. And in the settings, I have it so you can paste them every day. I'll post them and you just paste them in there. And then the eyeball, you can go inside the settings and do the same thing. You actually, with the AsherBot, you can go to you can DM it and just say plot these levels, and it'll plot the whatever's on the watch list or the core list, and it'll plot them on the chart like this. Yeah, so the gamma, so once again, let me move this. So this year, see how all this blue right here? We've been in negative gamma for basically the bulk of this year. So when we're in negative gamma, my strategy is different. I'm not just trend following. I have to then look for things that have been selling off hard, and I look to buy the dip, right? And I fade. But in positive gamma, all throughout here, like if you just go to my, if you're in the Discord, it's a lot of stocks that are set up. Like my most recent one was MGM, right? MGM. Right? Higher lows, getting tight, building a base, looking for a breakout. All right? Go to the weekly time frame, right? It's been trending lower, but now we're starting to trend higher. So I'm trying to catch an early potential stage 2 markup. Right? OII, right? That was one that I just talked about earlier. This isn't a positive trend, breaking out. But the thing is, I'm well aware that when you see charts set up like this, in negative gamma, you need to expect more fake outs, more whipsaws, more, choppy price action. So the strategy changes when the market conditions change, and the position sizing changes when the market conditions change. What's up, AP? Thinkorswim. Okay, so the indicator on Thinkorswim, you update it basically every day. So when I post it on Discord, that is the indicator. So you go into go to SPY. Okay, so you see how SPY has these white lines. That's the daily implied in the orange. So you create your indicator, and then you paste the creation. In the tutorial, I walk through this. I made a little tutorial too for the expected moves and the eyeball, but you would open this up, like say the daily implied, and then you would just Control A, you would delete it and paste the new stuff in there, because this updates every day. The negative gamma is, I'm just looking at the gamma flip line. So when I use Gamma Labs, it's right up here. I look at it end of day or beginning of the morning, so 6646. So that means, we're underneath the gamma flip line, which if I go like this, you can see the gamma flip line is right here. We've been under it. So this is where dealers sell into selling, they buy into buying. The market conditions actually change when you're underneath the gamma flip line. you typically get more volatility, right? And you could see that in all the things that I share. Like, for example, when I show the VIX, I use this as the diagram. The gray shaded boxes, that is when we're in the under gamma flip line. And notice how, like, oh, we're getting onto the flip line. It tells us, hey, maybe we should take our foot off the foot off our gas. And then look at, boom, we spike up higher. And there's, other things that I look at, like backwardation. Over here, that was day one. And then look at, bam, shot off. Look at this here. We've been in negative gamma. We're still in negative gamma, right? So if you knew this early on, you're like, okay, conditions are changing in the market. We're going to have higher volatility, Yeah, for TradingView too. So TradingView, I have the indicators here. I have FOM expected move levels and FOM IVOL levels. IVOL is for my AsherBot. Expected moves are for what I manually pull every single day. It's the same thing basically. But for example, like you see this level right here and this level, that's the daily Asher level, IVOL level for Asher that I manually do. And that means I can get daily implied moves for like Tesla, Microsoft, Apple, all those because they don't have daily expirations. And then this one here is a smaller list that I manually pull from the options chain. And I like to create kind of a zone. So, people always ask me this. It's like, take a look. These little red and green zones here, that's the Asher level, the IVOL level, and then also the daily expected move that I post both. I'm going to have to make a new getting started post on all of this stuff. I did make a tutorial for the AsherBot. Yeah. Oh, where do you put the script? Where do you put the script? You mean, well, first you have to just click the link for the script. If you're in the Discord, in the scripts channel, you just click the link and you add it to your indicator. You go to indicators, or you click the link for the script. Here, give me a second. I'll just share the script. It's not letting me paste it. Why? Try again. That's for IVOL. There you go. So you just TOS, it does, but trading, but not trading. Oh, so okay, so once again, you install the script, right? You install the script. You got to watch the tutorial. You got to watch the tutorial because it'll make it easier. So once you install it, you have to paste the levels in there. TradingView is Thinkorswim. I'm giving you the levels right away, and it plots it. In here, it's different. In here, you have to go into the settings of the indicator after you add it, and see this right here. All those levels. That comes from the plot command from the AsherBot inside. Or if I paste it on Discord, the expected move section, then you would copy it and you would paste them in here. The daily, you have weekly, and you have monthly. And you paste them in. And then you hit OK, and then it plots them. Just different platforms work differently. I'll just watch the tutorial. It's in the Asher bot section. Yep. Commodities other than fuel caught up. Yeah, I mean, commodities are taking off right now. That's for sure. Definitely some opportunities within the commodities sectors and sections and just various industries that have to deal with them. MOS, isn't that like, what is MOS? Isn't it like fertilizer or no? Am I? No. Or yes. Or some of these are doing good. This one looks kind of just going sideways. It's too complicated to automate levels with Thinkorswim. For Thinkorswim, it does it, but for TradingView, it ain't going to work because TradingView, I'd have to go in there manually, do it every single day, but then people have different levels that they want, right? So in the way that I built my AsherBot is, I mean, you use it, you put the indicator in, and then you could build out a watch list of levels up to 25 names and the core levels, and then you could get those levels charted just by doing the plot command. But automatically won't work because the options data isn't. It's not how the system works for Thinkorswim. I made automation in far as expected moves go using a Garch model, which is a way of like measuring volatility. I'm not going to break down the math of that. And then I took that volatility model utilizing a Garch model, and I created expected moves from that. And it's pretty rad, but also it's like not as good as my IVOL level. So yes, you need a glue gun to paste. You're in Moo and Veggie. That's, I mean, looking pretty darn good. I mean, talk about holding up well. Veggie. Yeah, same here. Nice. Good looking charts. Good areas of ideas of where you can get out, right? Clean looks, clean run-ups. All right, guys, I'm going to call it quits here for the stream. Garch is Garch. Garch model. It's a way of, I don't know, quantitative. It's just a statistical way of modeling volatility, I guess. So I'm not a mathematician, but I know things. Some things. How do I pull IV? So I'm using a specific IV for my IVOL levels. It's not just like a raw IV Black-Scholes type thing. There's like smoothing that goes into it. It's pretty legit. It's pretty rad. And I think it works best with individual stocks. So that's why that's why I use both of them, because it works very well with individual stocks, but like I know that S&P 500, I like pulling it right from the options chain. And once again, that you kind of learn this stuff through time. Hey, what's up, Vinny? How did I end the NASDAQ 1000 to your chart? Are you dual charting? I'm not 100% sure what you mean. Are you saying like, how do I have the S&P 500 here and then like the NASDAQ over here? If that's what you're asking, I just clicked up here and I just picked a different layout. So I have one chart here and then one chart here. I really don't know how to use TradingView all too well, to be quite honest. I'm still kind of learning it. Thanks, Sub-Zero. Yeah, the tick indicator is pretty rad, huh? Pretty cool. Yeah, you'll definitely notice a different IV on all your sources, for sure. Absolutely. It's going to look different everywhere. So I personally like Thinkorswim's IV data. It's not even their IV data, actually. It's if I utilize the raw IV data in Thinkorswim, I do add mathematics to it to skew that number, right? I change that number. In a way, it's kind of like smoothing it. Yeah, I don't know if that's necessarily true. But their expected move model, I love, because it's averaging the data throughout the expiration of many strikes. And I like using that. For individual stocks, it's okay. It works pretty good. Works fine. The one that I use is I really like, and I utilize it for implied moves throughout the alert system, and I really enjoy. I like it. So yeah, it's an expected move, people. It's an expected move. You're going to have different levels. That's totally fine. Think of them as zones anyway, right? Think of them as zones anyway. It's people want preciseness and certainty. You're not going to get it with an expected move. It's expected, right? It's probabilistic. Y'all now everyone's coming in late to the party. I'm about to get off. I did talk about Tesla. Tesla was down at the weekly implied move, and we were talking about how potentially set up for a move trade back into. So we looked at the daily implied move going into tomorrow, about $9.50. I would have liked it if it was down here, to play it back up, but I did Apple. That was the one that I traded today, down here. And I have a little on, but not in my shorter term account. It's in a different account. Okay. I miss you, bro. I just maths a lot. I just maths a lot. Yeah, the only way I'm staying longer is if I just hop on my Fortnite and just play Fortnite. I need a mental break. That or a walk. I think that's pretty much it for the day, to be quite honest. Not only for me getting off, but that 66.05 up here, we tagged. We were doodling around the lower implied move, and we're kind of backing off here. We have, who knows what's going to happen after hours with the whole deadline. I'm not going to pretend like I know or pretend that I understand. I'll have a market brief out on Wednesday. Maybe if things go crazy, I'll try to go live tomorrow. But I appreciate everyone being out here. I'm going to call it quits. Thanks, Kyle. Kyle, you've been around for a while. Appreciate you always coming through. Mahalo, Barkster. See you, Eco. See you, Reed. My throat is like drying out right now. See you, Meat. See you, Vinny. We'll talk later. See you, Ease. MS. Leda. Gata. Means mushrooms in Farsi. I made a mushroom indicator. It tells you when you get really high and really low. It's amazing. See you, Joshua. See you, Varma. See you, Pachinko. See you, Sub. See you, Ben. See you.